Welcome to The Explainer. Today we're going to dive into the fascinating story of Ekso Bionics. This is a company with technology that feels like it's straight out of a sci-fi movie, but with a stock chart that looks more like a wild roller coaster. So let's get into it.
All right, first things first, let's talk about the incredible promise that sits right at the heart of this entire story. This is the part that gets everyone so excited.
I mean, at its core, this is really it. We're not talking about a new social media app or some little gadget. We are talking about technology that can help people walk again. It's about giving back a fundamental part of what it means to be human. It's powerful stuff.
So what does Ekso Bionics actually make? Well, these incredibly advanced robotic exoskeletons. Just try to picture wearable robotic suits that help patients in rehab centers learn to walk again after devastating spinal cord injuries or strokes. This is truly the cutting edge of medical robotics. And this right here, this is the company's official mission. It's so inspiring, right? It's clear and it creates this huge sense of optimism, this feeling of almost limitless potential. You hear that and you can't help but think, wow, this company is onto something huge.
Okay, so with a mission that powerful, you'd probably expect a smooth, straight line to success, wouldn't you? Well, this is exactly where the story gets complicated.
And that brings us to the central puzzle of this whole thing. How does a company with such genuinely life-changing technology end up with a stock chart that looks, well, like that? What is going on behind these wild swings?
Now, what's really interesting is that this isn't just random chaos. This pattern, it actually tells a story. It's the classic signature of a fundamental conflict between two powerful opposing forces, and we're about to unpack both of them.
So first, let's investigate what fuels those dramatic upward spikes. What is it that sends this stock soaring into the stratosphere every so often?
The upward spikes, they're all about excitement for the future. You know how this goes. A positive press release comes out, it starts creating buzz on social media, and suddenly retail investors are piling in. It's a classic case of FOMO, that fear of missing out, and it just sends the price rocketing skyward.
And here's the crucial point you have to understand. During these rallies, the company's valuation isn't based on its current sales or its profits, not at all. It's a bet on its potential. Investors are buying into the dream of what this company might achieve years down the line, and that pushes the price way, way ahead of its actual financial reality.
But you know what they say, what goes up must come down. And for every single one of those speculative spikes, there is a powerful force pulling it right back down to earth. Let's call it the gravity of business. And this is the tough side of innovation. Selling these complex medical devices is not easy. The exoskeletons are incredibly expensive, hospitals have these super long, drawn-out purchasing cycles, and the company has been operating at a loss. When the revenue just doesn't grow fast enough to match the hype, the stock feels that heavy gravitational pull.
And here's another piece of that financial gravity, something called share dilution. To fund all their amazing work, companies like Ekso often need to issue new stock to raise cash. Think of it like a pizza. If the company is the pizza, issuing new stock is like adding more slices. The pizza itself doesn't get any bigger, so each existing slice just becomes a little bit smaller. And that can really put downward pressure on the stock price.
So this extreme volatility that we keep seeing, it lives right in that gap. The gap between the promise of tomorrow and the cold, hard financial reality of today. So what can this teach all of us about investing in these kinds of innovative technologies?
This really lays it all out, doesn't it? It's like you've got two forces at war. On one side, you have the hype, driven by future promise and pure sentiment. And on the other side, you've got the fundamentals, the hard numbers, the revenues, the costs. Ekso's stock chart is basically the battleground where these two forces are constantly colliding.
So what are the big takeaways here? Well, first, a stock price that's jumping all over the place isn't the same thing as a healthy, growing business. Second, you have to remember that game-changing tech is a marathon, not a sprint. It takes time. Third, and this one is huge, hype can set expectations so high that even good news can feel like a letdown. And finally, you just have to go into these things with your eyes wide open to the risks involved.
Ultimately, it all boils down to this one crucial distinction. The Ekso Bionics story is a masterclass in the tension between an incredibly exciting future promise and the much slower, more challenging reality of a company's present-day performance.
And that leaves us with a final thought, a question for all of us really. Whether it's robotics or AI or whatever the next big thing is going to be, every innovation has this exact same tension. So the question is, when you're looking at the future, how do you balance the incredible dream with the cold, hard data?